aspect of it. I think that still continues even today. RBI intervenes, but only intervenes at the end, doesn't come at the first step.
But is it possible to have all the good things and not go through a market correction when there is a necessity?
So in finance, absolutely, you cannot say everything will be good.
Yeah. So
see, finance itself is a risk.
Yeah.
So risk is either on the side, and again your decision making. Again your decision making depends upon factors. Factors has other factors why it came. So it's a cascading effect. So again comes to the policy aspect.
Okay. Now with some time gone through the discussion, we have seen the business point of view and how people look at monetary policy. But as an AAM Aadmi, living, let's say, in some village in India, the purchasing power parity of Indian rupee has been constantly reducing since our independence. What do you think is the cause? But as we have concluded from this particular discussion that businesses need lower interest rates, higher liquidity in the markets. How do you think RBI can balance these two? Which are on two sides of the extremes.
Now, basically, now, as you are an economics man, India is an agrarian economy. You agree for that?
Yes.
Even today, we are still there.
Yes.
Even though industry has come up now, we are now more onto agrarian aspect. Even today, we have problem with your village and farmer and everything. He may not get the right price for what he is doing, or your scale of finance may not be good if you look at the agriculture. Similarly, industry fellow, what happens is, for him is a market. If it's a manufacturing, is market again, is competition. Now, I think we saw that burst economy when the Chinese goods came in, which were cheaper. But later on, we learned that life of those are not so long enough. So there again, people have lost it. Okay. So basically, AAM Aadmi concept, what I will tell you, more than 60% in India may not understand monetary policy. Or maybe higher level, I don't know. Even in cities, I don't know how many of them read economics on budget speech, then monetary policy, I don't think so. They are more interested whether the deposit rate in my bank goes up. If it doesn't go up, he says, no sir, finance minister said so much, why it has not gone up. Again, it is the pricing policy of the bank depend upon your monetary policy. For a banker, he has to ensure that cost of funds is less for him. If it is less for him, he gets a better profit for him for his growth. So this is again a cyclical aspect of it. Wherein, yes, AAM Aadmi, what I suggest is, in today's situation, again, he can make money by looking at the different options of investment, where he gets the better chance. Today has got a chance to switch over at any point. That's what I mean.
My question next is to Mr. Nihar. Let's say Raghuram Ratan suddenly decides, because the elections are coming up in 2014, he increases the interest rates, to benefit the people. Congress government wants to control inflation somehow, which has been one of the major acquisitions by the other competing parties. Let's say he raises the interest rates, borrowing cost goes up. What would be the reaction from the business side for this policy?
Okay, firstly, there has to be a very strong compelling reason for him to do so. As we have seen that, we don't expect it to happen from our end because of the fact that we are seeing inflation pretty much at a lower level compared to what it was. The recent numbers at least suggest that. Now, I'm not going to get into the authenticity of those numbers as such. Okay, that's an open, debatable topic. Having said that, if the rates go up, we will see, of course, the borrowing and the lending rates going up. It has a big impact again on the capital-intensive businesses. Higher, interest rate outflows from their end, decrease in profitability in their books will show up over a period of time. But more so from the capital markets perspective, what will happen is that another increase in interest rates will bring down the bond prices. So that has a direct impact on the capital markets where the bond funds will not earn much. And India has a huge amount of money invested. If you look at the Indian mutual fund industry itself, we have about 8 lakh plus crore, and majority of that money is invested in the debt markets. And that is where the impact will be felt. That the person who's actually not participated in the last year in the equity market, will again have a downfall in his mark to market when it comes to his bond pricing, and his bond funds will not perform. So it's a clear cut where even the common man gets impacted right from the companies and to the common man. So yes, that is something which is definitely going to be there. But giving this in mind, I don't see a rate increase happening unless and until substantially something changes dramatically in these few days which is left for the monetary policy. That is. And knowing Mr. Raghuram Rajan for what he is and who he is, and he doesn't and he will not give a damn about any political party, let's say, to that sense. Because I think he's a man of a very strong character that he holds, and he's shown that with the kind of policies that he's brought in right from the day one when he started work at his office in RBI. And he goes with a lot of macro factors. He goes with a lot of conviction that he believes in the system, rather than I don't see anybody influencing him for these things. And I'm very confident about the way he goes about and his approach. And that sort of thing has been a morale booster, in fact, for the entire corporate sector, if you see. And the kind of decisions, and very bold decisions, so to say, to point out that how he controlled the depreciation of the rupee. If you see, he started some transactions in the forex market, that is a swap for the oil marketing companies that he brought about, and immediately we saw a correction. And there's also sentimental as well as realistic changes, a mix of both that happens in the currency market. We saw dollar going from the 68 to the 62, and now it's been playing around the 61 and the 62 levels. So that itself was a big booster. Now again, that again is not good enough in the long term, but we would like to have the dollar somewhere around 50 to 54, around that. So that will be really good for us, from the macro perspective for India, to keep our reserves, etc., intact and pay for our oil payments, so that none of it becomes very expensive. But yes, on the flip side, yes, the IT companies is something who will bear the brunt on that place. They've already enjoyed enough of that increase in cash flows due to the currency. I think it's high time that the payback happens. So
okay. My next question is to Mr. Govind. So, do you think the RBI is independent of political, the justification comes from the finance ministry? Do you think it's independent of the finance ministry?
The first thing is it independent? And the second thing is, can it be independent? I think we have to look at it holistically. Yeah, it's an ideal way to say that it has to act independently and all, but then the economy overall holistically, how is it? That is also important. So I feel RBI has done a decent job with all the changes and so many flip sides on the economy, and knowing that how the system works in India. Still, I feel RBI has done a great job being independent. And at the same time, RBI cannot be completely independent. It has to work in tandem with the government. It cannot take decisions saying that no matter what happens, what is the impact on the society, I will go with what is the best policy from the RBI point of view. So it is a teamwork there, and RBI has done a decent work.
So my question is to Mr. Nitesh. Sir, you being a behavioral economist, how do you think a consumer reacts to rising prices? Because as we've seen since, let's consider 1970, 1 kg of rice was never 40 rupees. No, I'm talking about the market prices, not the subsidized prices. How do you think? What does a normal man do? How does he behave?
Yeah, that's what I was talking about last time. Is it okay now? Yeah. So basically, what happens that, as Nihal was saying, that value of money which we consider now, it might not be same later on. We have to think from future perspective. So what happens? Because of money illusion, we feel that we have money, we try to consume more, we try to spend more. Later on, we realize, no, I was wrong. But by that time, too late. So this is what has been happening. So that should be controlled. And as we were discussing just now, whether it is politically influenced or not. correct me, Mr. Guha, if I'm wrong. There is 1934 Act is there, right? Yeah. So government can always, overshadow the decision making of RBI. So that also influence. So what I mean to say is, uh, when any decision is being made, we need, as Govind was saying, that we need to see it holistically and how it is going to affect the common man. Because common man's behavior would be very different from the way people, decision makers are thinking. So that we have to take into consideration.
Sir, I will address as an economist to the entire panel here today. Basically, my acquisition on the central bank, per se, is it has a monopoly over commodity coinage. Okay, and the law of diminishing marginal utility says for every one extra unit that is consumed, the value or satisfaction that you get becomes lesser. So if the central bank does not have any basis to print how much ever money they have, and the inflation is inherent in such a situation, where does the AAM Aadmi go? As I've seen, all the panelists are in agreement with the justification of the central bank. What is your response, sir?
No, basically, the best rule in an inflation, what you're talking, the Aam Aadmi should know he should save than spend. He should save it than spending it. When he spends it, he knows he has got a much higher purchasing power, goes on doing it. He has no idea of what he says in the future aspect. So how many of us still say, oh, I'm in the inflation area, I have money, so I should plan and reduce my expense and I will save for the future. If that can be done overall, the volume of people who are saving in whatever may be the area, whether whichever is the aspect of it, I think that should also control. Because once you start reducing your spending aspect of it, automatically the definition is as simple as that. Too much of money chasing too few goods. So you have too much of money, you reduce its spending automatically.
But what about the essential commodities, the price of which has been steadily increasing?
I will tell you one thing, essential commodity is nothing to do with RB or river.
Yeah.
See, you saw the sugar lobby.
Yes.
So when you have the lobby, there you say it's political, outside the purview of RB. What Aam Aadmi can do? See, we had that hoarding and other thing. Now today hoarding may not be there, but in some other way it happens. I don't think that your monetary policy will have on the regular food items. Earlier it was a selective rate control.
Yes.
RBI used to say now that has been taken up.
Okay.
Just one point. I have a slightly different point of view in a more different sense. I feel that whenever price hike happens of whichever commodity, I think India likes it. As a consumer, stop buying it. They still like it. On the other side, it makes the consumer, from an investor's perspective, I'm talking as an investor here, it makes him more ambitious. 10 years back, inflation at 6 odd %, now at 8 odd %, I need to earn more. So to earn more, I need to invest more. It increases my risk appetite, my involvement or my entry into the capital markets. So I'm participating in the capital markets. If you see, overall, less than half of less than 5% of India participates in capital markets. So at least some positive side of it is what I am trying to look at. So he gets more ambitious, he gets more aggressive at a certain level in his investments. So I think it could have its positive effects also. That is, and at the end of the day, he's still buying. So I think that makes it very apparent that yes, he brags about it every single day. I do, that price rises and this and that, but he's still buying.
So, what is your view about the RBI's monopoly on the commodity requirement?
Do we have any other chance?
Yeah, that's the other one. We have Competition Commission of India poking its nose in every other industry. Don't you should poke its nose into the RBI?
I feel it is required and it should continue. It's easy to talk about what if the situation, what if RBI doesn't have that monopoly. We have seen it happening in different parts. I don't think, first of all, we can, as an India country, we can even afford to think about that. It has to.
So we thank the panelists for their esteemed opinions. I would like to conclude as an economist what I think about RBI. Basically, we have a system called fractional reserve banking where it's a combination of loan banking and deposit banking. So the thing is, inflation is inherent to a fractional reserve banking system. There is nothing that the central bank can do in order to balance the interests of the AAM Aadmi and the businesses. So basically, it's a monopoly that they want to continue over over the people. The thing that the RBI is a guardian angel to protect the investors is all the claim that it has political intentions. So, but what we understand is India being such a vast country and the financial literacy of the people in India being so low, we need somebody, a guardian, in order to protect the interests of the investors and the common man. So I agree that we might continue to have the RBI for a longer period of time. Hopefully, we can have a another debate with the same panel regarding the existence of RBI in future. So, if there are any questions by the audience, the panel would like to answer.
I would like to start. Now, the question that I really want to ask is, see, look, we really do not understand, quite honestly, these economic terms so very well. Even though economics is one of my favorite subjects, I want to know from any of the expert panelists here, what is it that we should do to really understand these basic terminologies of economics, and how do we go about starting our journey to understand? Because when we read newspaper, quite honestly, when it comes to economics or anything of that sort, we don't understand what they're trying to do. All that I know is, okay, like somebody just mentioned, I think Mr. Nihal mentioned that the price goes up, people still like it, they say, okay, what is it that I can do to still earn that money? That's all we all think like. We really want to understand and know how to analyze what is coming ahead. Right? How do we know that, okay, inflation rates are going to go up? How do we plan? I think Mr. Govind will be the best person to actually answer this question, what I feel. But yes, I would really appreciate all the panelists to also answer this as to how do we go about learning and understanding these things, and also managing the finances better.
Start one more course in SMI.
That's the best answer you've given, I guess. Okay.
So, but on serious note,
Yes.
do we need to understand everything? And whatever we need to understand, to what extent we need to understand? Yes, there is a huge gap between the ground, the fundamentals of this, the policy, and what is the understanding even amongst the professionals. I'm not even talking about the literate people here. I'm talking about finance professionals. I'm talking about economics. The awareness is very, very low. Why? Because what is seen, if I put it in a very simple sentence, as an all I want to know is, with the same money, can I buy more? Can I buy less? This is the final impact on my purse. Now, going back to your question, how do we make it? The financial literacy has to be more. The penetration will have to be more. For example, even if we take stock market, like how Snehal mentioned, it's probably only 5% of the population which is actually involved. The awareness, how do we make it? Yes, it is full of jargon because it is not a simple topic. It is quite complicated. And how do we make it more relevant? It has to be broken into understandable terminologies. It has to be more meaningful in terms of how it's going to affect. It's about explaining the demand and supply in a simpler sentence. So that's where the qualified people should come together and make it more relevant, and probably make it more, it should be a part of the curriculum at an earlier stage. Probably it should start from the high school level, or maybe the +2 level, if not as a doctorate subject.
Sorry if I may interrupt.
Yeah.
See, I completely agree with what you said, Mr. Govind, but where is the starting point? And actually, I think a lot of us here also feel, is it really important for me? There are a lot of youngsters, there are a lot of students also sitting here. I just want to tell them that how important it is for them to really understand these economic concepts. What do you feel? How important is it as a panel? how important is it for us to understand? Really, the term economics might sound really complicated for all of us, but is it? I mean, I'm sure it is extremely vital for us to know about these concepts. But can you emphasize on how important it is for me as an individual if I do not understand these things? What is the risk involved for me? If you can, explain that, I think that'll make more things clearer for us.
I can answer. So I'll tell you how relevant it is for a common man, for any one of us or for all of us. How important health? We say wealth is the next most important thing after health, right? So if, for example, you have a toothache, would you like to mend it yourself? Would you? You would go to a dentist, right? But you understand that there is tooth, you need to brush your teeth every day, that's what you deal with. Similarly, with money. All of us earn money. Some of us will put it into deposits, etc. We will invest it. We should know basic things like what is my bank deposit rate, what are the deposit rates for different periods. For 1 month it is how much, to 1 year it is how much, and you should ask the banker also that why is it different, boss? Why are you giving me a different rate for these? These are basics. And how much is your salary increasing year on year? How much is your expense increasing year on year? But if you really want to know what is the next step of it, rely on a professional is what I would say. Don't sit and break your head into whether the CRR will go up or will it go down. Now, also coming from the point of view of what you could do to understand these things better, forget about the jargons. Just go an hour with your bank, and I'm sure that all of you guys hold bank deposit accounts. Ask your banker questions. Get him aside for 10 minutes or something and just say that I have a few doubts which I've listed down. The interest that I'm getting on my savings bank, is it taxable? Yes, no. So I think this is more than sufficient for a person who's wanting to know just about how his money can work for him. I think if he wants to go to the next level is where a professional is required. And financial literacy is of course going to play its part because the penetration on financial literacy is not much, but having said that, there are a lot of efforts being taken to improvise it. Every mutual fund today has a budget which is set aside every single year on an annualized basis to spread financial literacy. You would have seen ads from Birla Sun Life Mutual Fund as well. These ads keep coming up on financial literacy. Janoge to manoge or something like that. So I think there's a huge amount of effort which is happening. More so from our perspective, I think SMI is doing a lot on spreading financial literacy. I take so many workshops with SMI, and I understand from the people itself that how much they are more inclined towards this because now they really think that the time has come where in fixed deposit, real estate, and gold are not the only places where they want to put their money into. There's a huge amount of opportunity which lies there and which needs to be captured over a period of time, keeping risks in mind. So fair enough. But people want to know about it and people are willing to know about it today. So I think that's where the difference is. And start with the basics and then grow on. And if you want ultimate advice, then go with the professional's advice.
But only from an angle of as an investor, if I really want to invest my money to stock markets, I think it plays a very important role whether I have to understand what is the RBI's next move going to be like. As a basic investor, if I really want to know when is the right time for me to enter or exit, I have to really understand these terms because if I do not understand these basic economic terms, I don't mean the whole world of economics, but then a little bit of basics as to inflation, employment rates, the CRR. How many of us actually realize the value and importance of when there's a CRR hike? What happens? We really don't know about that. What happens when there's a CRR hike? What is it that a student should know? When I say student, I literally mean a student who's in probably in first year, second year, or in BCom. How does it affect him? Does it affect him at all? And if it does, then how does it affect him?
Yes, I think they have to know that.
From
From an education level also, yeah, they have to know it. But I think these basics are covered in their syllabuses and what we are doing from them. And there's no other way of learning it apart from the fact that keeping and reading newspapers for 10 minutes in a day. And when, of course, I'm talking about the newspapers that is questioning things. And that's how we will learn. So,
To add further to this particular question, why economics is important is, see, basically man is a social animal, and his entire life he goes through several interactions with other people. And one thing that he has identified over the history of mankind is that he alone cannot produce what he wants to consume. So he is inherently dependent in order to produce that he would like to consume in exchange for goods that he can produce and others would like to consume. So basically, it's the interaction between the entire, the society or the human beings is the basis for economics. But what happened? We earlier had a wherein goods and services were exchanged, but ultimately we moved on to the, to having something called money. So understanding money and buying, how much power it has, what is the, what is the purchasing power that it holds, and what is the value of my services, my goods in the market. We don't want somebody else, a third person to come and determine what the value is of my particular goods or service. I want the person who is willing to transact with me to decide. So basically, coming back to the topic of central banking, essentially the central bank, which is printing money, is telling me how much my goods and services are worth. So basically, my argument as an economist come from that side. So why economics is important is because to understand your value in the market, to understand the value of the goods that are there in the market which you want to consume, to have a, to live in this world, to have a, to have a life, a social life, do what you want, travel, basically consume. You need food, water, everything costs today in this world. That is why economics is important.
To get a really convincing answer as well. I think all of you have explained us pretty well why is it that is required. Also let me tell you, if I can just go a little bit away from the topic, the one reason why we have to keep this panel discussion today is to quite honestly make you guys feel really, really guilty. How much of it did you understand? I'm serious. I'm serious. How much of it did I understand? Now the whole, until unless you're not exposed to an environment like this where we really don't understand things, there's no need, there's no, you're not able to create the eagerness to learn, right? The whole idea of calling you today here, was this, to make you really realize that how much of knowledge do we have at the moment. I'm not trying to, tell you that we are not knowledgeable, right? I'm including we, so I mean myself too, right? The reason is, until unless we do not interact with a person who knows a little more than us, we really don't feel like learning more, right? So we always have grown up in college having fun, so people around us are all like-minded, they know as much as we know, right? So you're pretty comfortable, you're in a comfort zone, so we have to come out of our comfort zone to really learn more, right? I think most of you are in your BCom now, and a few working professionals, businessmen, and I see a lot of business background people as well here. It is very important for us to learn these things. It's not that I'm not an economist, I don't have to learn, I'm not a banker, I don't have to learn central bank. No. You have to know you have to know about it because your businesses are attached to it. It's all about money. Right? So you have to understand how the money is affected by these decision makers in the government, that is the central bank or RBI, how their moves affect you and your life is very important for you to know. Your movie tickets, your prices go up. Do you understand how it goes up? Do you know why it goes up? So to understand that, if you understand these things that has been discussed here, I'm sure you know a lot of things about it. So I think that's something that I'm really happy about. That you've been a lot of help for us to understand how things can start off for us. I think so. We have to start the habit of reading the newspaper at least. Is what I feel. Most of us, I'm sure, don't read. Most of you don't read newspapers, I'm sure. Yes.
One moment. Okay, as a tip for all these upcoming graduates and prospective investors of our country and so on, my suggestion is very basic and grassroots level. First, start doing your budget when you start earning. What's your income? How much you are spending? Do you have a surplus or do you have a deficit for that month? If you have a surplus, don't waste even a rupee, let it earn something. Don't keep any money idle. If you have a deficit, try to get the money from the cheapest source. Don't pay from the money lender 20-30%. You can't survive. Please update the knowledge on an ongoing basis by reading financial papers. Yes, 6 months, 1 year you may find it difficult. The jargons is not the thing which threatens you. You can always get the information because today you have a lot of opportunity, not only because 20-30 years back we did not have a proper capital market. We had no idea about money market. We had no idea about commodity market. Today all the things have come to you. It's only your proper first understanding, then planning. Finally, yes, I am unable to do it. Is take help of what the professionals who certainly take. That's where you can certainly make a success to build up your assets. Thank you.
I thank the esteemed panel, to have been part of this initiative called SMI Dialog, which is an initiative by again Stock Market Institute to engage the alumni of Stock Market Institute and spread the mission of financial literacy. Let us have a round of applause for the panelists. So, Kishore sir would like to address the gathering.
Thank you very much for the panelists. This is the place where you should take the information from. You don't have to search for Google. They are better than Google. Right or wrong? But how much of it you take? I've been seeing many people, I meet lot of students who have finished the courses or who are still doing their courses. I try to understand what is it they are taking home. One says, sir, I got a girlfriend after joining SMI. That is not the thing that I am actually interested in. Yeah, there are a lot of couples who have been formed there, who came in as individuals, going out as a couple. That is not the intention why we started with our institute. We want people to get financial knowledge. That is the effort because of which we were in Delhi yesterday. A lot of things that we are planning for you people, and one such thing is this. This would continue on a monthly basis based on the topics. The best part is now there are a lot of people who are watching it online, live streaming. So this is something that we have added to it. So this will continue to go on. Only thing is, there's one particular saying which has struck my mind. Day before yesterday, we were at Jainat sir's house for a breakfast in the morning. He just told me one small story, and that changed my life. Last 2 days, things, how I look at life is changed. He said one particular story where a small, beautiful bird fell into a dry well. It was flying and it wanted to drink water or something. It fell into the dry well. The dry well was too deep and it fell to the ground there. It was not willing to come out. It told that nobody actually closed the well. There was no signboard, nothing. And I'm deep in the well. Nobody is ready to save me. It was screaming for help. A lot of people from the village actually saw it and they were like, come out, you can fly out and come out of the well. But the bird was, no, somebody should help me. Then is the time I'll come out. Because it was small little creature and a lot of people were enthusiastic, all started gathering around the well. The bird started feeling good. Good, yeah, there are a lot of people coming and watching me. Somebody will actually help me out. They saw it for one whole day. Next day also a few people came and watched it. Thought they will come and help, but nobody actually did that. After which people stopped going to the well and the bird started losing out energy because it never had anything to eat there. It became weak, it never could fly up, and it died. What was the moral there? Whatever you'll have to do for yourself, you'll have to do it. If nobody else does it for you, it's your duty to do it. If you're not ready to do it, then whatever we do here as a form of this event, nothing will help you out. I saw a lot of people who registered online who did not make it up here. That is their loss. It's not my loss. We'll continue to do this. And online streaming will help us reach more target. But that's not the thing. It's what you people take in. I saw a lot of people coming in from Commerce Forum. You thought, why I should go down here? What is it I learn? But there are a lot of things that these people said that I never thought about it. So it's for you people. So more such events. I want more crowd to be here. And very much thank you for Mr. Nihal, Professor Guha, Rakesh, Govind sir, as well as Nitesh. Yeah, sorry, I'm a bit weak at remembering names. Thank you very much. Hope more such events come soon. Thank you very much.
I understand that there are 2 questions. There is 1 or 2 stories. Yeah.
Am I audible? With reference to monetary policy, what I understand, it's basically the RBI tries to control the flow of money inside our economy. So how far does it actually help in controlling inflation?
Because when we see about hikes in repo rates, reverse repo rates, there's a discussion going on among panels everywhere in the TV that how far does it actually impact in controlling inflation? If it's controlling the flow of money, so basically it's good. It's good for the business. As in, if the reverse repo rates come down, then automatically the borrowing capacity of a you'll get loans at a very low interest. But how far does it actually help in controlling inflation? And is it important for RBI to keep controlling of inflation in its mind?
So basically, you have mixed up your question. Okay, repo rates and reverse repo rate is only the money availability or liquidity in the market. Bank will control. Okay, I'm sorry, RBI will control. Because again, banks depend upon the funds for their business. So where do banks put their money? Either lending aspect of it, lending either industry or any aspect of it. So basically what happens, availability of the aspect of it. So your inflation concept may be due to various factors. Your reverse repo rate or repo rate aspect, what happens is, if it is increases, what RBI feels is, banks will not borrow more. Automatically they cannot lend more. Similarly, the tools again with CRR and SLR also. So there is not one tool that is there. It is not tomorrow morning the effect will happen. It's over a period. Over a period, the flow of money into the industry. I don't know whether you have observed CRR, SLR, if they increase, industries people will shout, oh, we have no money because bank says we have kept everything has been held. There is no money for liquidity to lend. The primary activity of the bank is to lend. Okay. So, as far as RBI is concerned, repo rate, CRR, SLR are the tools which they will try to feel it can be controlled. Okay.
Yeah. One more thing. Instruments. One is the qualitative and the other is the quantitative. So with reference to quantitative instruments, which is used by the RBI in a monetary policy, how do you actually explain the open market operation which is done?
Basically, open market operations is something that the central bank of any country does when it buys bonds and sells bonds. Okay, this applies to the repo and the reverse repo rate only because there's an underlying asset that's
underlying asset is
government security bonds. So what they do is, if let's say the central bank wants to infuse liquidity in the market because the businesses need liquidity to now they want to borrow more money, invest in projects, generate employment, and it is also beneficial socially because it is generating employment because there is investment in projects. So the bank, what does it borrows? It buys bonds from from the market. So it infuses liquidity, from the money that it has. It gives away. It gives the money, and hence the liquidity in the market is increased. So this is buying and selling of bonds and by the central bank is called market operation.
And one of the RBI objectives is equal distribution of income through monetary policy. It's one of the objectives. How is it possible? I mean, I didn't get it. Like, what RBI decides the impact, we can see it's not immediate, it's not instant. It's in like say 4 months, 6 months down the line, you actually realize the effects on the ground. But how does it impact equal distribution of income?
No, where do you read equal distribution?
I have read it on the website, RBI itself.
No, what context?
That I was not able to understand. That's why I placed the question.
No, there is no, I don't think there is any policy where equal.
No, through monetary policy, they plan to have the money should be more equally distributed among people.
Wealth distribution not doesn't is the role of RBI. If you are looking at the distribution aspect of it, it's not a direct tax work as far as I feel.
I believe he's talking about
Liquidity, right?
yeah, balancing between inflation and growth.
Inflation and growth. That becomes complicated for you.
Any other question? Yes.
I have a question as well. Good afternoon. the World Bank and the IMF, primarily called the Bretton Woods institutions, are two intergovernmental pillars that supports the world economic and financial strength throughout, right? So how do you think the policies they make affect the world economies, and how can they be more liberal towards the emerging markets like India, China, Brazil, Russia?
So basically, IMF and World Bank, they came because of the Bretton Woods Conference, 1944. That was basically after Second World War had a worst impact on the world, how to mobilize and develop the countries. Even India was one of the beneficiaries, maybe recently. Maybe after 91, when we had our LPG aspect of it, India is much better. Normally, we may not borrow comparatively with IMF, even though we borrow, we have a better liquidity aspect of it. Their policy is basically the country wise. Maybe I don't know some of the projects where they are involved in it. RBI may take their guidance to make the policy, which is not easily available to you or easily make out unless you read the whole report of RBI, which is not made public.
I would like to add on to this particular point.
Please.
See, the second president of America, John Adams, he said there is one alternative way, to kill the entire society and the social system. One is through war, that is, technically killing people, and the other one is through debt. So the politics behind the Bretton Woods, the abolition of the Bretton Woods system in 1990, moving away from the gold standard into a Bretton Woods system, and moving away from the Bretton Woods system to a fiat system, has political ambitions behind it. Essentially, the United States of America wanted to control the entire world. So what they did was they cancelled the convertibility of gold, their currency. So I established something called a World Bank IMF in order to push dollar as the single largest currency for trade and transactions in and around the world. So they created something called euro dollar to help to capture the European markets, to diminish the importance of pounds, to diminish the importance of the Deutschmark. So, and these are the currencies that were very strong in Europe during that particular point of time. Then they had something called as special drawing rights, which is even today very, very applicable because these banks, the World Bank lends in order to develop infrastructure projects. IMF gives away loans to all these least developed countries, the LDCs, the third world countries. What are they essentially doing? They are doing what Adam Smith told. They are trying to run the entire world through debt. This is the political intention behind this particular aspect. But the claims that you see on the newspapers is essentially propaganda. That's it. So the motives behind World Bank and IMF is basically to control the entire. Yeah. This is the last question.
A couple of weeks back, RBI came up with a warning to the people regarding having exposure in Bitcoin currency. Okay, I would like to know from the panel what is your take on the Bitcoin currency, especially in the long run.
I'm sorry, I'm not aware of that Bitcoins. I have not understood because I only went through the paper. I don't know where it started. I'm unable to give you the correct answer. Please.
The thing is, see, basically, as I told you during the discussion, is that RBI has a monopoly in the money markets or in the commodity called money. Bitcoin is a cryptocurrency, which is the e-form of money, which can act as an alternative to the existing system of money. I mean, that is the government central bank printed note. So right now, RBI doesn't want any such competition. Anywhere in the world, they don't want any competition to be their country's, let's say the currency, let's say US dollar or wherever it is. They don't want any competition because, see, basically, what is the most important thing about money is trust. So the fiat system currency itself is based on faith, as
One more thing, why they are worried about is money laundering.
Yeah.
Where they have no control.
Because if, let's say, I and you have a transaction in Bitcoins, the RBI is completely left out of the picture because there is no transaction cost or there is no, there's no, they cannot have a control over that particular transaction. Let's say I give you a check. The bank knows I've given you this particular check. Whereas if I transact in bitcoins, they will not know. So the e-footprint is not at all there in that particular situation. So what happens is it is acting as a threat. The government established monopoly through their central banks. So bitcoins, they want to warn the people, saying they look at it as an asset. Because it has so much fluctuation, they want to regulate it. Ultimately, what they're going to do is they're going to stop this particular. They're going to make laws saying it's illegal to transact in that. That's all. One last question. Can I have one last question?
Hello Rakesh, I have one question. You all said about RBI, World Bank, IMF and everything. So my question is, we all know that all politicians and businessmen have their own account in Swiss bank, right? A huge amount is there in Swiss bank. Why RBI is not playing any role to carry out that amount here when it can help us to improve? Why?
Okay. He had a question whether politics has something to do with RBI. Maybe I cannot give a statement yes, because it is a system. Again, we don't know what exactly is the Swiss banking system, how did they get the money, what was the route, various aspects. See, that is one of the reasons why they are saying that Bitcoin should not come. Because anything you acquire has to be through a proper route. Suppose tomorrow you acquire something through Bitcoins, so RBI cannot make it. See, this is not today's problem. It is not today's problem. It should have been set right maybe about 50 years back. Now today, yes, if you say it must be the firm-handedness of RBI to say yes, I will get it back. But again, RBI governor is linked to the finance ministry because he has been appointed by finance ministry. So there that link is there. So I think political commitment is also required to see that you bring back the money. So in that way, RBI has done a lot of things in stopping Hawala, various aspects of it. In that way, we are much better off. Money laundering, all those things came. So they are doing by act. I don't know whether some act has to come that they should send it back the money which Swiss bank may not go on it.
So RBI keeping all details of transactions, like sir, to businessman to do a business, he has to give checks, right? And to politician also, it should be mandatory that each and every transaction to be doing checks. Then why this
Hawala was there earlier. Hawala was there earlier, but nobody knows how it happened. When it was stopped only, even in 1992, RBI could not stop with NBFC was not under RBI. 1,290 crores was taken out from the country of the investors. There were many NBFCs. RBI was there, but RBI said, I am not under that. Then only RBI took over the NBFCs. See, these are the regulations that comes.
Is that it? Okay. Thank you. Thank you all for attending this flagship program of the SMI Dialog. Have a good day.